All right, all right. I hope everybody's having a great night. Wanted to check in real quick. I know it's been a while since we've been here on the Carbon Capital channel, and that's mainly in part two. If you know me, right before the school kicks off, me and the family like to travel. We like to do a lot of stuff, so we've been all over the place. We've been in Mississippi, we've been in Louisiana, we've been to, and then we obviously jumped in, New Orleans and the cities in those, and then jumped up to Nashville for a bit, Charlotte, Asheville, just all over the place, and then back home. And I like to take a little bit of time off from trading, so we ended up taking off roughly about 4 weeks, and then now we're back. So if you jumped on this morning, obviously I traded live within my Discord. I've got a Discord that we trade live. What an amazing session. It's the first time back on the charts in quite some time as far as live trading. All the trading that we've been doing since then have been specifically just markups. I'll throw out some charts and things that we've got here and there for like screenshots. I'll do some voice recordings, templates. That's really it. So it's back on the YouTube for a little bit now. Palms are a little sweaty. It's been a bit since I've been in front of a camera. So let's dive in here and see what we got in the markets. So the first thing we're going to notice was today we finally got that daily push that we were looking for after that retracement back up. If you're on my live stream this morning, I said that this area right here was just a point of interest that I was looking at, because that was a wick fill that we had, a gap fill that we had in here, and we'd already touched it here and here, and sure enough, it came back down and gave us that move. Now, we were looking at our dots this morning, so on that 30-minute, we had some nice dots that had printed. Whoa, did not mean to do that. We had some nice dots that had printed. Bear me 1 second here. Let me go back to my template. Let's see here. I go to the 4 hour. So we had some dots previously that we were looking at, which was this one to this one on that old template. And I've got some of them over here. Let me find it. There we go. So on that daily chart, this was that break that we were talking about. We wanted that daily break to hit. Daily broke it, but just didn't close the daily below that zone, that was our TP3 reversal area. So this would be where it would reverse, but I really want that daily to push down and test these levels. These are the same templates, guys, that we've marked up since this was June of this year, and then we had this one marked up here in May. If you look at our daily one that we've got here, and I'm just going through a few of the templates here. I've not even looked at these on this computer because I normally just live stream from my computer downstairs. But this one here was solid. If you remember the big trade that we took, it was right here in July for that rejection on the daily that pushed down. And look at that. It went up, painted a swing high marker. We had our wick fill. If you remember, we had our stop loss in this area at 35,750. So, it barely missed us. That was our whole number that we were looking at. So, stop loss was small, especially right here. I kept telling people, look at this daily wick zone area, play in this. So, you've got a less than 100 pip stop loss. And obviously, price since then has pushed down well over 1,000. So we'll take that all day. But we caught this rejection right here, and then we started playing on these breaks. So we had a break up here on this rejection, another break on the 30-minute here. We got in on this daily break here on this big push down, and then we got in on this daily break, which some people protected, got knocked out when that big push last week. I told everyone, as price gets higher, continue to get in sells at the higher price point so you can push it down. So that's all we were looking at on those dailies. And it transformed great. So this was a dot to dot on that other daily too. So we had a dot here, and it almost pegged that dot there. And you can see here that we finally broke all 3 dots. Now, if you go back and watch any of my Zoom sessions, I said anytime you have 3 dots that connect, 1, 2, and 3, when we can finally get a nice candle closure below it, that's when the magic happens. All right, well, we didn't get a candle closure here. Price came back up, candle opened here. We had a bunch of wicks come into play, but today we finally got that candle down. It did wick our zone, but now we've got the candle closure over here. So this is good, as far as this break. Price could push right back up into that zone, and we can get right back on that trend. However, this signifies a nice move for us going into the rest of the week. So what I really want to look at was on that 30-minute this morning. Everyone was like, Andy, how did you catch that move? Well, one, we've got a dot to dot. So if we just take a regular trend line and we hit that dot, there's your break right there. And TP is your last swing low, right? So, obviously it broke. There's TP. 275 pips, and then shot right back up. I mean, look how beautiful that is. There is your dot, and we can zoom in to get, you know, a better picture of that dot over here, right there. So you can use either low risk, the base of the candle, which is where the dot is, or high risk, meaning it may hit, it may not, right there on the dot. So if you look at that on the dot and we swing over, bam, it hit it like a champ, and that's exactly where it rejected and went back up. So that was a solid trade. Now, outside of that trade, you can also do the fib fan. And when you do that fib fan, you connect that bottom break point, which is your TP3 reversal right there, and that kind of gives you some higher breaks. So as price, as soon as we saw it swing low, you throw that dot on, you throw that lower dot on here. Obviously, price bounced up. We weren't looking for buys. We said we need breaks for sells. So there's a break one. That's your swing high right here is your stop loss. Okay, so let's play the game. Price breaks right here. Okay, so that's your entry, and then your stop loss is 10 pips above that entry. All right, so we'll paint that red for stop loss. All right, obviously never got hit. Then you've got another break right here. So there's your other entry. We can paint that one blue. And where's your stop loss at? Up here at the same point. All right, and then we had another break down here in this zone. So you could have taken another trade right there, and your stop loss is obviously the red. So your first trade that you took, which was this break, so you had 400 pips total in stop losses across all these trades. However, knowing this was your TP, these trades turned you for 243 plus, we'll call it 300, almost 900 pips. So not a bad trade at all for this. And not to mention, we had the runner up here that we're still trading at because this was a rejection. It was also a 30-minute wick fill, you name it. So using those dots played a massive role into these trades, and your stop loss never got hit. You're able to protect these all the way down. Template that we've been using. Meaning this is giving us our whole numbers every 250 pips. So we got 33,000, 33,250, 33,500, and so on. All right, you can see we've rejected this 35,000 here, and got a wick. Price tried to push up, got pushed back down to 34,500 right here. And then, of course, we bounced. Shot right back up to 35,000 and got rejected back down again. Now we got tied between 34,750 and 34,500 with the daily candle setting right here. Now, ultimately, these are the moves that we really want. You can see once we finally broke this area, what did price do? It shot up. And anytime we've broken this lower area, what's price done? Shot down. So if we go over here and look, that 33,750 area, and up in here at the top, 34,500. Anytime we break in these big zones, because right here's where price is, so we're at the top of this zone. Look, it just melts itself. So will that happen this week? Probably not a full-blown melt, but what I would like to see is this daily candle do something like that, right there. Oh man, I want you to sit right there. Like that, maybe bounce back up into here, and then give us that nice push down into 34,000 flat. Now, Andy, why do you like that number? As you guys know, I'm not a big Fibonacci guy. I don't like using the Fibonacci for anything much, to be honest. But we look at this weekly, we have a candle right here that's not been ate. So when you talk about eating candles, so you got this big push down right here, and these candles come and boom, boom, and they eat up the rest of this candle. Okay, same here. You had this big candle push up, and look, price came down, 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 finally got most of it, came back up, and then all that candle's gone. So all these candles have been taken care of, except for this candle right here. All right, so if we take and we throw a Fibonacci on it, like this, 50% retracement for the whole candle right here was this right here. Just that little mark. Okay, it got down to 38 some change, but look, we still have the rest of this candle right here that's not been touched. And normally it eats up that whole candle when we look at it. So, you know, I'm looking at that a lot. And then we've also got this little weekly over here that's not been touched, and that takes us to the bottom of our zone. So again, we throw that on there, and you can see like we still got none of this down here has been touched at all. So when I look at these whole numbers, it's like, man, that could do some damage for us. All right, so I've got that in mind. We'll look at this daily though. Go back out here. Again, this candle right here has not been hit except for right up here. So even if you look at it, you've got, go to my Fibonacci. Let's take this candle right here and come down. And as you can see, 50% is right there on that 34,250 to a T. And guess what? We've not touched it. So, you know, for me, I want to see us break back down. We need to be playing below 34,000 if I'm being honest. I feel anything, you know, when we look at that daily and we just zoom out on it, I feel like we've just been 33,750, you know, was that area that we just stayed in forever. I mean, you can kind of see it from here all the way over. We always kept coming back and touching it. And then, you know, right here when we blew out of it, right there in July, you know, we went up. So July, we've been up in here. We just kind of bounced around, slowly coming down. And then we took that big dip down. Came back up. It couldn't break that 35,000. Came back down. Tried it again. Couldn't break. Came back down. So I'm hoping that this is that move that we've been waiting for to start playing below 34,000. Because as you guys know, once we start playing below 34,000, we trickle back down to 33, get down maybe to that 32, and then that eats up all the candles that we have, you know, on that weekly. I mean, outside of that, I mean, obviously, if you zoom out, we've got some big boys over here that haven't been touched. You know, these right here were more than 50%, so I'll consider those okay. If you can get that 75%, it's pretty good. But when you look at this, and again, we throw that Fibonacci on there, we take a Fibonacci and throw it on this bad boy. I mean, 50% got hit. All right. But then let's go down here and throw it on this one. And when we throw it on that one, 50%'s not been touched at all. So, I mean, that's, and look, when you look in that area, I mean, you're talking about 29.6 up until about 31,000. So that's why I say I really want to play down into these areas up here, and that just gets us lower where we're at. Now, Andy, why are we not talking about all-time highs? Well, I don't like all-time highs right now. If we're being honest, oh, 1 second, there we go. Sorry, I had to fix my mic there. If I'm being honest, you know, the all-time highs just, with everything that's going on right now, and Grant, when you say what everything's going on, you hear people say, well, everything's going great. You know, everything's going well in the economy. People are doing the best they've ever done. You know, businesses are thriving. That's hard for me to agree with. I mean, I was part of a business meeting last week with 2 local businesses that are like, they're scared. They're scared for their business. Things aren't looking well. They're not happy with their numbers they're bringing in. They're trying to push staff to do more without less. And anytime management comes into a meeting or lunch meetings or whatever and says, guys, we have to do more. As a business, we've got to do more. Numbers aren't matching. We're not bringing in the revenue we should. We're not doing this. We're not doing that. Anytime those meetings are taking shape, that's a bad sign. You know, especially when you hear so much of everyone's doing great. Well, you know, but Andy, like, look at the houses. House pricing's going great. Everything's looking good. It's just, we've never seen the market this way. Well, we're slowly pricing Americans out of living is what we're doing. I mean, if you take right now the average, and I can only speak on my behalf of Chattanooga, Tennessee, and some of the areas we live in, but the average cost of, you know, you look at just rent right now, because rent's what you're always going to judge the economy off of. You know, you can, you know, people say, well, no, you want to look at mortgages and you want to look at what people, yeah, but those are always going to range, because some people are paying down 50% on their house. Some people are paying down 25%. Some people are getting better interest rates. Look at the renting side of it, because that's where a bulk majority of people start suffering. When you look at apartments, when you look at condominiums, when you look at, you know, duplexes, when you look at houses for rent. So if you take, you know, just the average in our area right now for a house, you're hitting $3,000 a month rent. And then let's say you and your wife both have a car payment of, you know, $450. And then you've got your groceries. You know, we see that right now. I did a question on Instagram, and I was like, hey, what's your family spending on average for groceries? The average came back at $420 a week. So when you take $420 a week and you put that in there for 4 weeks, Well, then you've got your gas. Let's say your gas is $100 a week for each car. That's going to put you up at $800 a month for both cars. Well, then you got your insurance for both cars. So you throw your insurance at both cars. By the time you get done with that, keep in mind you've not done anything for your kids. You've not done anything for yourself. You've not included internet, gas, water, electricity, none of that stuff. So, when you throw in, say, an electricity bill, you throw in a water bill, then you throw in an internet bill, and you throw in all this stuff, by the time it's all said and done, we're up to $7,400. Okay? So when you're sitting here at $7,400, and we say, okay, what now? Andy, what else can we do? Well, your kids may be involved in sports. They may go to a private school. You may have childcare. You're going to have those extra things that come up. So for me, I'm going to say those extra things are going to cost you about $120 a week, which is on the low end. All right. So we put those in at $120 a week, and then let's say you and your husband just want to put a little bit of money aside, or you want to go out on a date night, whatever it is. Let's say that you're able to do that once a month, 2 times a month. Let's just say, for argument's sake, $200, and that's on the low end because you still got to pay for a setter and all that stuff. We're up to $8,000 for rent, 2 cars, insurance, groceries, gas, all that stuff. $8,000, and you've not even put any money back for savings. So that means right now, to live normal, okay, normal in terms of what I see in my neighborhood, the neighborhoods next to me, that's $96,000 a year just to cover the base of your bills. The base. Now keep in mind, I was using these numbers off numbers that I've seen here, numbers I've got written down over here, and the things that I've seen off Instagram and polls that I've made. What's crazy about this number is if I rewind back, just say when me and Hannah had our first kid, which was 10 years ago. Well, sorry, it was 2010, but it was 13 years ago. Me and Hannah owned rent for a 2-bedroom townhome that was brand new with 2 full baths, massive living room, vaulted ceilings, big kitchen, wraparound countertops, garage, everything. We were paying $615 a month. Now, my car payment at the time was $525. I think Hannah's was like $600. Our groceries, I remember our groceries to a T because we were happy. We could go get all of our groceries for me, Hannah, and Lainey at the time, so there's 3 of us. It was less than $120 a week. All right. So when I throw that on here, and then obviously throw in our gas, electric, internet bill, all that stuff, and then like I said, miscellaneous spending, let's put that on here. We're sitting at less than $3,000 a month. So 3,000, 8,000. That's a massive difference. Now granted, the house is going to be larger than what we had, but that same place that we had then, now, is 1.5 times more. The groceries are almost double. The gas is double. Things that you're doing when you go out to eat, double. The things that's taking place whenever you're going out on a date night. We see food at restaurants going up in price. So, no, people aren't in good shape. So when I say that, and I rambled along a little bit too long on that, was when my buddy Aaron here was talking, and he's like, is a crash coming? I don't think we're going to see a full-blown crash. I'd love to see it, honestly. I think a full-blown crash would be great, because one, it'd give us a reset of the market, and it'd be pretty cool in my eyes to see it because I'm shorting it. But I think we're going to see the downside of these highs we've been trading in because of that. You saw the news that was coming out with China, no longer the king of everything that's taking place. Obviously, Apple moved their operations out of China to India. You've just got a lot of weird things happening in the world right now that's like, we shouldn't just be 2,500 points from an all-time high. Because if we look at the price that we're at now, and I'll take myself off the screen here so you can see this. If we just look at the weekly, actually let's do better. Let's look at the monthly. The price that we're at now on the uptrend, was really in May and June of 2021. Now, I don't know about you guys, but I remember May and June 2021 pretty well. Sorry, I had to message Hannah a quick message here. So, if you remember anything about that, we had a lot of just crazy things going on in 2021, especially in May and June. We had all the crap going on with the coronavirus, which was shutting things down left and right. People were slowly coming out of it, but businesses were having businesses could not get products to save their life. There was nothing on the shelves. You go to the food store, there wasn't anything. We had the shooting in New Orleans and Idaho that was crazy. We had more shootings in Colorado and Chicago. We had crime rates going through, the whole U.S. We had that gas line hack that led to the shortage of gas. I don't know if you remember that. People were taking their gas cans to go get gas and all that stuff. Then Biden started putting the sanctions, on Russia. We had another mass shooting in San Jose in Florida. And we had that big plane crash in Nashville. And then obviously all that stuff was just news that was coming out. It was just causing a bunch of, I would say, chaos amongst people. Obviously a plane crash or a mass shooting doesn't really change money hands, but it does change when you look at the overall mental side of people, Americans, if you will, because people were just stressed out. 2021 was just, people were done. They were over it. And that's when you were going shopping, and I'll never forget it. Me and Hannah were going to the mall. It's like, I need to get a pair of socks at American Eagle. And there was a line outside of American Eagle, and they're only allowing like 25 people in their store at one time. So that's where we were trading at with all that mess going on. And that's exactly where we're at today. Now, granted, we should have never been that high to begin with. With everything going on in our economy, we should have never even been up here. The move from here to here was printing money and just a nightmare. In my opinion, this was the government just taking advantage, big banks, of the opportunities that were there and just pushing this up. In my opinion, when people are like, Andy, where do you think we should be on this chart when you look at? I was like, you know what? This right here, this time frame right here, in this, we're not really October, about right here, was the best America has been in a long time. We're not really, right about there. Right here, these months right here were really, really good for America. Small businesses were thriving. Everyone seemed happy. There wasn't any forced agendas on anyone. There wasn't tons of riots taking place. The news media outlets have always been crooked, but it wasn't terrible. It was good. And then all of a sudden, things got better, and then the market and everything, the whole world shuts down. And then somehow, from the world shutting down, like when I say this was good, this was good. And from this good area, we're now trading almost 10,000 points from here. That makes no sense to me. That makes zero sense. If you take a market from here to here, and we're in worse shape up here than we were here, let's rewind back in time and say, okay, from this point here, where is our 10,000 pips? We've got to go a ways back to find that. How far back, you ask? Right here. So think about this in terms of the economy, okay? In 2014 to before COVID, it took that many years. It took from 2014 to essentially 2019, 5 years, to get 10,000 points up. And actually pretty decent economy. Like, we grew a lot through here. Things were going great. Me and Hannah opened our business in 2014, and we saw like this progression right here. We saw that. People started spending more money. People started buying more things. It was great. Now, think about 2014 till present, if you will. What big events happened during that time? And I'll look at the chat to see what's going on. I mean, really the only thing that I can think of was you had Ukraine and the whole Israel thing from ISIS. You had the Ebola breakout. If y'all remember, people were hemorrhaging and bleeding all over the place and all that mess. And I mean, that was really it. I mean, while it sounds terrible, it wasn't bad. And we jump into 2015. I remember the attacks we had in Paris. We had that really bad earthquake that killed a few thousand people. And I mean, that was really it. I mean, in between 2014 to there wasn't a ton of bad things that happened. But take from here to here and think about everything that's happened in there with Ukraine, with Russia, with COVID, with China locking people up in their homes and killing people, and India beating people that were coming out of their homes past curfew. People were getting arrested in the U.S. for being out past their curfew and not having a note from people at work. To me, this is garbage. I still think we need to be down here. So I will settle for anything 32,000 to 30,000. I'll settle with that. And as you can tell, I've not been on a Zoom a long time. I mean, a live stream, because I'm talking a lot tonight. Yeah, inflation plays a huge role in that, Jason. When is carbon coming out with ACH? You mentioned it was coming soon. It's coming soon. They're testing it as we speak. As with anything, whenever you're handling money and you're handling people's deposits and stuff like that, you want to be sure that it's working 100%. So that is still being tested and worked on. And Hive and Hopper, M2 money supply, look at that chart compare. Oh, most definitely. Most definitely. So guys, cheers. It was a pleasure to be on here. It's been a while since I've been on Carbon Capital's YouTube channel. Hopefully some of this helps you. Again, everything expressed here is my opinion, especially with the news and the markets and all that stuff. That's just my opinion. It doesn't mean that, when we look at this chart, that we're going just completely crash to the bottom of this. It's just my opinion on where I want the markets to go for me. That's where I'd like to see it go. If we were to bounce here and shoot back all the way up to the top, cool. We would come back and look at the charts next week. But all I can say is everything that we've had from this weekly markup, which obviously when I zoom out, you can see we're right back in that box that we've had, to the daily markup where we got our rejection and we've slammed down, to the same daily markup, to this daily markup with the 3 dot to dot that finally broke trend, closed a daily candle below it, touched our zone of 34,345. And if you've not seen that zone, you can go to my YouTube page, or you can look at the page, you can get the videos here on Carbon. You're going to see these same zones, the same templates. And then we look at this 30-minute, it's nothing on it. We have that in blank. And then there's this template, which is just, I use this for whole numbers. So when we look at all this stuff taking shape, we have hit every single major move at the higher time frames this year. So I wouldn't want to stop that now. And I don't know. Let's keep an eye on it. So going into the market tomorrow, I think it's very important for us just to look at these zones right here. All you gotta do is zoom in and say 34,500. If we can close a 15-minute or a 30-minute candle below that 34,500, that's going to lead us to that 34,250 that we want to see. I firmly believe in that, given the selling pressure that we've had now going on for the 4th day in a row. So again, great day, great week. It's been a great year. Wes Dennis says, I've been killing it on the Carbon Capital micro account. Congratulations on that. If you don't have a Carbon Capital micro account, I highly suggest you look into it. The micro account allows you to trade at 10 cents per pip on gold, US 30, any indice. You can trade 10 cents a pip, which is huge for people that are trying to take these same trades, because that means you can open up an account with $1,000, trade at 10 cents per pip, and you're never going to be too over leveraged for that account. So it'll help you grow it It makes trading easier. I mean, if you follow Giuseppe or Rudy or any of those guys, they've been using a micro account as well, and they've been having a blast with it. So, well, guys, it's going on almost 10 o'clock here at my place. I'm about to go downstairs and eat dinner with the family. It was great, again, being here on Carbon's channel. I want to give a shout out to the guys over at Carbon Capital for allowing me to come on here and live stream on the YouTube channel. You're going to see more of this now that we're back home. Things are settled down. I'm back on the charts. We took, like I said, almost a month off from trading, which was nice. When I say trading, like live streaming and all that, because it just, when you're live streaming and you're sitting here day in, day out, it gets pretty crazy. And if you've been following me, I've been working on some other projects with the team over at IVM, which you'll hear more of that as well here coming soon, which has been unreal. So yeah, just a lot of stuff coming on, and super stoked about it. So the way that I plan to do this is, I've got the video today. I gave the breakdown of what I expect's coming. I will be trading back and forth. Live streaming back and forth between my channel and Carbon Capital's channel. So subscribe, turn on those notifications. Be sure to give this video a like, drop a comment. Tell me what you think the market's going to do. What is your outlook? What are you looking for? And let's talk about it. So again, you guys have a great night. Thanks everyone for tuning in, and we'll see you soon.